A sharp dip in manufacturing drives down June IIP into the negative, with markets ignore the weak factory output numbers to hold on to the 5350 mark, now dipping in trade. Cap goods stocks slide in trade, but FMCG shares hold firm.
Big money will obviously head to the bigger markets, but within the bigger markets, you would be absolutely nuts to be buying Brazil or Russia or China.
Shankar Sharma does not see a big bull market in the near term, but bets that India will outshine all other equities. Says he's buying emerging market bonds right now. Continues to be bullish on Tata Motors, Bajaj Auto, RIL and SBI.
Bharti Airtel's cup of woes is brimming over. The stock is now Nifty's worst performing component on a year-to-date basis and a 5-day basis, as below par quarterly earnings push the shares to a 2-year low.
Fresh trouble for Infosys. The US former employers filed another suit over misuse of B1 visas in California. The tech major tells ET Now they've launched a comprehensive investigation. That's an ET Now exclusive.
And the 165-kilometer long 6-lane Yamuna Expressway connecting Noida and Agra inaugurated. Manoj Gaur tells ET Now he is expecting a 200 to 250 crore rupee revenue in the first year. This is Markets at Lunch, here with ET Now.
Plenty of big guests joining us over the next 60 minutes right here on ET Now. Here's the lineup on the show this afternoon. Virat Sachdev, Vice President and Head of Equities at HSBC AMC. Jerome Bulls, Head of Research at Ashmore Investment Management with the FIRU. Also on the show, Street View at Lunch, we'll be joined live by G. Chokalingam of Centrum Wealth Management. We'll check on global equities with Philip Gazelles of BNP Paribas Fortis Markets. As always, technical calls through the show. CK Narayan and Ashlu Gujral will talk about the technical side of the market. That's lineup over the next 60 minutes.
Well, yet again, it's flatter to deceive. So what started off setting to be a very good session has completely given up its morning gains, and now we're trading absolutely flat in trade. Bring up the Bank Nifty as well. While the mid-caps too are falling off the cliff right now, the Bank Nifty is the one which is completely reversed trend and now completely flattened out, just about marginally holding on to the green. While Bharti, of course, is staring at a 2-year low. It's another 5% shaved off for this stock after a 7% cut yesterday. So just about defending the 260 odd level. You've got a Tata Motors, which ahead of its earnings again is looking weak. SBI, PNB, Ambuja Cements, Reliance Industries, DLF, Reliance Infrastructure. So key heavyweight counters are the ones which are weighing heavy on the indices right now. On the flip side, it's turning out to be a good day for M&M, which impressed the street with its quarterly performance. A good day yesterday, and that trend continues today as well. Another 3% put on in the green. Metals as a pack has been seeing a fair amount of traction in the last 2 days. So you've got a Sterlite as well as Sasagua, which are looking good. ITC, HDFC Bank, TCS and Tata Power as well are the ones which are holding up.
Kick off the show with a really big fundamental view. Shankar Sharma, Chief Global Trading Strategist at First Global, does not see a bull run for Indian equities and suggests investors to tone down their expectations. He, however, has a lot of stock-specific strategies, including a big bet on Bajaj Auto and small private banks. Listen in.
To say that a big bull market is around the corner would be being foolish. It's a very challenging environment. I don't think those challenges are going to disappear. We've liked Bajaj Auto for a very long time, and obviously, when you like something, it doesn't mean that every quarter or even every year, will turn out to be okay. Last 2 quarters have been tough on the domestic market for Bajaj. I mean, that we all know. But given valuations, given what they have achieved on the export front, which will be very hard for Hero Motors to replicate. Again, now don't hold out a bet that Bajaj is going to go to 2,500. Again, within a challenging context, it looks like an outperforming stock. Tata Motors, when it was about 280 or 290, my thoughts on the stock were, which was about a few months back, my thoughts on the stock were that, just viewed in context of what has driven the numbers and what's been driving the numbers has been really the Land Rover part of the business and not the Jaguar part of the business. One has to be a little bit circumspect, because when you make vehicles that are selling well but that don't look well, at some point, that disconnect will come out. And that's like I gave the example of BMW. It makes terrible looking vehicles ever since, they got Chris Bangle as a designer. And even though he's gone, you have somebody else, but they have not changed it that much. They've just smoothened out the rough edges. It still looks a terrible looking car. And obviously when you compare it to an Audi looks better. You see the numbers in India, Audi is really trumping BMW. Globally now Audi is number 2, it has overtaken Mercedes-Benz. So, you have to focus on the looks, and I don't think JLR is doing that on the Land Rover part as much as I would like them to do. I don't know the inside thing well enough to say that it's purely company or industry specific, but, looking at what TCS has been doing, one could say that Infosys could have done better. We've liked obviously the smaller private sector banks like IndusInd, etc. And we've liked the PSU banks like SBI and UCO, etc. We've liked capital goods stocks like BHEL, etc. at these valuations. We had downgraded the stock when it was about 2 times higher. But now at 225, 230, I think the valuations are compelling. Pharma look good. We've liked all these names for quite a while now. And they've been doing quite okay. Even the valuations are stretched. Still, you will do a lot worse than to buy pharma. Don't buy, obviously, telecom. Reliance if you're a trader. Otherwise, I would still stay away from the stock.
Okay, let's just pause for a bit before we get to some more perspective on today's trading day. Apollo Tyres' earnings are currently flashing in front of you on your screens. The net profit has come in marginally higher. We were expecting a figure of about 130 crore rupees. 138 crore rupees is what Apollo Tyres has delivered. The top line, however, that we were expecting around 33.50, that has come in a little lower at about 31.65. Quickly bring up the stock price as well for you and show you how it's currently panning out. The earnings, of course, were expected to see some bump up on account of lower rubber prices this quarter. The stock, though, has come off from the top of the day, still holding on to a good 2.5% gain. Let's see what the margin as well is look like. It is going to look like this quarter, because we're expecting an expansion of nearly 2%. 11 percentage point is where we're looking at Apollo Tyres margins to come in at for this particular quarter. The industry-wide improvement in earnings has already been witnessed by the other tyre manufacturers as well. Strong revival in non-India sales as well is expected to lift up the earnings for Apollo Tyres this time, and higher capacities as well are going to aid sales growth. The top line, though, like I said, has come in a little lower than what the ET Now poll was indicating. The stock, though, holding around that 81 level. The market, though, has been completely disappointing. It's flattened out after what looked like an okay session to start off the day with. Ashwini Gujral, fund manager at ashwinigujral.com, joins in for more analysis on the markets. And Ashwini, that's precisely what you had indicated. While it is a gap up, there was no surety whether or not this is going to hold on.
See, we're in the retest zone where we are retesting, levels that came in a couple of months back, about 53.50. Now, we are at a turning point. Either we can move forward from here, and it could be 250 points on the Nifty, or we can reverse from here. So market is in that decision zone where it will decide, what it needs to do. So in case the market closes above 5400, that would indicate a buy. And in case we start closing below 5300, I think then you should assume that the market has turned. Meanwhile, we could spend a few days in this 100-point range trying to decide what to do. But at higher levels, it's clear that, the market is facing selling, and the defensives are coming back into fashion. Things like ITC, Hindustan Lever, Tata Global, etc., which is another indication that momentum is now giving way to more defensive buying.
We stay with us, plenty of stocks to talk about, but first let's also address the important macro data that the markets had to digest in trade today. Factory output for June contracted 1.8%, driven by a slump in manufacturing and capital goods. This is the third time in 4 months that industry output has fallen. The June IIP figure is way lower than the market forecast of around 1% growth. Manufacturing shrank 3.2% from a year earlier, while capital goods slumped under 28% in June. But the markets have completely ignored the IIP data. Why is that? Let's find out from a banking editor, George Cherrin. George, help us analyze the situation. Is this because the data isn't really credible, or is the market hoping that weak IIP data probably builds a strong case for a rate cut?
Well, I think, Sandeep, it's two factors really. One, of course, the point that you mentioned, that these numbers are no longer viewed as being credible by the market, and you just need to look at the press release that's put out by the Central Statistical Office every month on the IIP numbers, and you see the huge volatility in certain categories. Rubber and insulated cables being the most volatile within that, which this month has contracted by something like 82%. Even three-wheelers have contracted by something like 30%. So most of the internals within the IIP data that you get every month is not very credible. And I think it's been acknowledged that the data collection process is not credible. So that's one factor, like you mentioned, that is, that makes the market choose to ignore the data. The other you need to remember is that this is, this is a lag indicator. So this is data for the month of June. We are in the month of August today. And I think the markets are really looking ahead for cues in terms of what to expect in the future rather than looking behind them to see what happened in the past. I think everyone knows that June was a bad month. July is not going to look any better. August neither, though we're just at the start of August. So lag indicators typically don't tend to act very, the markets don't typically tend to attach too much importance or significance to lag indicators when they take positions or take a view on what the outlook for the market is.
Thanks so much for that analysis. Let's also hear out what economists, bankers and market participants made of the IIP data.
My sense is this is good in the limited sense that this will probably prompt some policy action going forward. As the agriculture output begins to come down, this will have a knock-on impact, a cascading impact on the entire rural infrastructure, which is the services sector. And services, remember, is the area that has kept growth up. Even as industrial growth has cratered, agricultural growth is coming down. Services has remained robust. The rural demand story, even the urban demand story has remained more or less fairly stable. And this is the one that is likely to bring down growth.
But right now, IIP numbers as of now are continuously dismal. When we don't believe that rates of interest have been the major factor in slowing down the economy. The main ingredient is the lack of facilitation in the projects, hundreds of crores getting stuck. You just tell me 1% rate of interest higher matters much less than a 2-year delay to any entrepreneur in his project, which can add up interest cost and revenue delay much longer.
There has been a slowdown in discretionary items, so it will impact maybe, we have already seen some impact in other industries like say a pickup in auto and housing loans and I think entertainment, apparels. So obviously it will also affect top-end discretionary even in FMCG. If there is food inflation post-drought, that will lead to perhaps downtrading and titration of consumption of basic goods.
Okay, just want to highlight Apollo Tyres and the stock price movement after its earnings. While the PAT has come in largely in line or a little higher than the ET Now poll, the top line has come in a little lower, but the margins have completely come in bang on. 11.1% on the EBITDA margin, and the stock is now appreciated nearly 4.6%. Some comments coming in from the management as well, saying that they are seeing a robust growth in their South African division. So that is really aided growth this time around for Apollo Tyres. The stock now perking up at 83 levels. But the other one which is awaited from the auto basket, the big boy, Tata Motors, that is slated to come out with its earnings. Let's bring in Yatin to talk about what the street is expecting from Tata Motors.
Okay, we'll just get Yatin in just a bit, but let's also should focus and talk about the other big ET Now exclusive of the day. It's fresh trouble for Infosys in the US. ET Now learns that a former employee has filed a suit against the company over misuse of B1 visas in a California court earlier this month. Remember, this is the second such suit after a similar one filed by employee Jack Palmer, a case which is set to go for trial in the next 10 days. Chandra Ranganathan joins us with more details on the latest suit against the company. Chandra?